Welcome back to Market Farafat on ET Now, and moving forward with the list of stocks and news that are buzzing today. Now onto the technical front, we are being joined by Ashish Kyal from Wave Strategy Advisors. Hi, very good afternoon, Ashish. Thank you so much for joining us today on ET Now. Coming to you for your first stock, you have picked up Titan. This particular stock has been showing momentum in the past recent weeks now. So, where are you placing yourself, on the buy side or in the sell side?
Hi, afternoon to you and all the viewers. See, the overall trend for Titan remains positive. It has broken about the previous resistance level as well. So it will be on the buy side. Today we are seeing some selling pressure here, but I think the overall trend remains bullish. Use that as an opportunity to buy this stock for the target of 2750, which is the earlier high. On the downside, the support for Titan comes to around 2460 levels.
Watch out for Titan in trade 2552. Moving on then, it's BLS International that's in the news, as the company has said that they've signed an MOU. This is with Thailand to accept electronic visa on arrival applications for 17 countries. They said this is for the upcoming season, and they've collaborated with more than 46 client governments, including diplomatic missions, embassies, consulates, as well as employees, technology and processes data security. So that's the latest news that's keeping BLS International in the spotlight.
Okay, moving on to the next sector in focus, and the next sector in focus is the sugar sector, having sweet gains over the past few days right now. If you will see, all these counters from Balrampur Chini, Dhampur Sugar as well as Dwarkesh Sugar are up anywhere between 1 to 2%, and the news flow says that the global sugar prices surged to the highest level since October 2016. If we talk about the domestic prices, they have also seen an upsurge, where the domestic sugar prices have risen from 32,250 rupees per ton to 33,500 rupees per ton. This has been showing movement in the stock prices as well. And if we talk about the production, then the sugar production has now slipped 3% in the October-March after the crushing ends, and on a YY basis, because of the slip in the production, and on the flip side, the hikes in the prices is what the story is playing in for all these sugar counters gaining in trade right now.
All right, moving on then, Ashish, let's discuss your pharma bet. Is Sun Pharma one of the strongest contenders within the pharma basket, large caps?
Yes, indeed. If you look at the overall stock, the Sun Pharma has actually outperformed within the entire pharma space, and the stock is looking positive after giving a good move above that 1,000 levels as well. I think this Sun Pharma is headed towards 1,060, which is the earlier top from here, and on the downside 970 is a good stop loss, so the risk reward is also looking very promising.
Sticking with the pharma then, Vamakshi, you have picked up Ipca Labs. Why is that so?
Ipca Labs is in focus after a note that has come in from Macquarie. We're seeing that the company has upgraded its rating on Ipca Labs to neutral from underperform, given a target price of 810 per share. Now they've raised the recommendation, and they believe that Ipca definitely had a forgettable FY23 performance, but they're expecting some meaningful improvement to kick in from FY24 onwards, and this could be mainly driven by the sales force productivity improvements, API sales growth, as well as easing cost of inflation. They're expecting, however, the company to report a weak set of numbers in the fourth quarter, but nevertheless, they believe that the concerns about the future downgrade earnings revision are already factored in at the current levels. So overall, when we look at Ipca, Macquarie has upgraded its rating to neutral from underperform, given a target price of 810 per share, and that is the reason why the stock is up in trade today, nearly 2%.
All right, there you have it. That's the word coming in on Ipca Labs. Meantime, Dalmia Bharat Sugar, Shesha, is the stock that you're tracking?
Yes, this one is in focus on the back of expansion plans that the company has announced. It informed the exchanges about setting up of grain-based distillery capacity at Nigohi unit of the company. This distillery will have a capacity of about 250 KLPD with a capital expenditure of about 400 crores. This is expected to be commissioned by September 2024. Apart from this, the company has also announced capacity expansion at Ramgarh Sugar unit of the company, and capacity at this unit will increase from 6,600 TCD to 7,000 TCD. This will be done at a capital expenditure outflow of about 14 crores. Post commissioning of both of these expansion plants, the company said that total crushing capacity of the company will stand at 38,250 TCD. So on the back of these expansion plans that has been announced by the company, the stock is in focus today. It is off the highest point of the day, but despite that, holding on to gains of over 1%.
Okay, moving on to the next stock in focus, and Ashish, coming to you for the next one. You have picked up SBI Cars. The stock has already shown good momentum in the past 5 days, but do you believe there's more headroom for upside?
Yes. If you look at SBI Cards, I think the stock has finally given a good reversal from the downward levels. It was moving down and showing some kind of a double bottom bounce back from there. And the neckline is placed around 760. So if the stock manages to, cross that 760 mark, I think it is headed much higher towards 820 levels. And this can be the much awaited relief rally that many of the investors have been waiting for. So 820 is the short-term target, but I think it can eventually go much higher towards 900 as well. And on the downside, support for SBI Card is at 729 levels.
Okay, so those are the supports and the targets coming for SBI Cards. But for the stock number 27, shift focus to Aptus Value. This company has come up with their business updates for the quarter gone by, and healthy business updates coming in, where the disbursements have shown a growth of 30% on a YOY basis with a sequential growth of around 12%. The AUM has now grown to 30% on a YOY basis to 6,730 crores. When it comes to the GNPA as well as NNPA numbers, that also has shown some improvement. GNPA has shown a reduction of 29 bips from Q3 of FY23, while the NNPA stands at 0.86%. On the back of healthy business updates coming in, Aptus Value holding a gain of around 1.4%.
Time to move on then and discuss your large cap pick, Ashish, and that's L&T within the engineering space. It has been at the receiving end of a whole host of orders, and in the last 6 months as well has picked up quite a bit of steam from those 1900 levels all the way to close to 2270 plus. What is your assessment as to how one should be approaching the stock now? If you've missed the bus, is it a good time to buy?
Absolutely. See, if you look at L&T and do the relative analysis comparative to, Nifty or any other stock as well, it has shown a very sharp relative outperformance. It is about to touch the 52-week high when majority of the stocks are still down 5-10% from there. So I think the outperformance should continue from here. The stock is about to break above the 2300 levels as well, which will give the targets on the upside towards 2400 on the upside. So 2400 is the target for L&T right now, and on the downside, the stop loss can be maintained at 2190 levels.
190 as the stop loss and 2400 targets coming for L&T. But pharma is definitely in the pink of health today, and Vamakshi from the pack you have picked up Aurobindo Pharma already up 2%. Tell us what's the news flow.
Well, absolutely. This stock is in focus after a note that has come in from Macquarie. Macquarie has upgraded the stock to an outperformed rating, and the company is quite positive on Aurobindo, and that is mainly due to improving US generic fundamentals, having the largest product portfolio in the US amongst all its Indian players, as well as benign valuations. Now, Aurobindo Pharma, they believe, has the biggest ANDA filing pipeline with nearly 187 ANDAs waiting for approval. On the back of all these positive factors, Macquarie has actually increased its earning estimates for the year FY24 and 25 by 5% and 6% respectively. So given all those factors, there is an upgrade coming in from Macquarie. They've upgraded Aurobindo Pharma to an outperform rating, and in fact also increased the target price from 430 earlier to 600, and that is the reason why the stock is holding strongly in the green today, up nearly 2% as we speak.
Thumbs up there on Aurobindo Pharma from Macquarie. Well, moving right on, let's hear it out from Pankaj Tibrewal then of Kotak Mutual Fund. He believes that some of the Indian-dominated pharma companies look extremely strong. Let's listen in.
In the pharma sector, what we have seen for the last 3-5 years is that US has been a spoiled sport. You have seen consolidation on the buyer side in US, and that has led to pricing pressure for most of the companies in the US market. What we are incrementally looking at is that the Indian business continues to do extremely well. And there are many companies which have very strong franchise in India. And it's like an FMCG, quasi-FMCG business, where cash flows are strong, return on equity in the Indian business is extremely strong, and they generate quite a bit of profits from the Indian business. So that's one part where we are extremely positive on companies which have a dominant share in the Indian market. The second one is that in many companies, what we are seeing that along with Indian business, they have the US business. And if you do the valuations today, the valuations are only pricing, valuations for the Indian business, and US business is either coming free or maybe slight negative in some cases. And there we are seeing that as incrementally we are seeing data points, the price erosion has started to come down. Earlier we were seeing high single digit of price erosion, and that's now settling at 4 to 5%, which is quite okay. So the incremental change in the US is actually turning out to be positive. And because of last 3-5 years not being so good, many small and marginal players are vacating that space, which will be very, very positive for serious players out there. And the pricing will, kind of consolidate. So I think that's where we are looking at that, which are the companies where you think that incrementally things are changing better in US. And from a valuation perspective, market is not subscribing any value to the US business now, and it's not there in the price. And hence we believe that this will be the way we are approaching the pharma sector.
Welcome back to Market Fatafat. We're moving on to the next stock in focus. And Ashish, coming to you for the next one. We have been seeing good momentum in all these cements names, and you have picked up Grasim, which has already shown a breakout in the recent past. Do you expect the momentum to continue on the upside?
Yes, absolutely. You see, Grasim has just started showing the third wave on the upside. I think the momentum is yet to pick up from here. The stock has managed to find good support around its 10 days average. There is a positive crossover as well that we can see, and a rounding bottom kind of a pattern. So I'm expecting the stock should move towards the level of 1750 on the upside over short term. And the support for the stock is at 1620. So as long as 1620 is intact, even at current levels, one can initiate long positions for the target of 1750 or much higher levels.
View coming in on number 30. Let's move right on then and focus in on Relega Enterprises. The company has gone ahead and said that they're going to acquire My Insurance Club, which is an insurance web regulator. This is from iGear Holdings, which is part of the Indian Express group, and this acquisition will enable them to expand their offerings into insurance distribution space as well. There's also a share purchase agreement, and that has taken place, and that is also keeping the stock in the news. They've entered into a share purchase agreement with Relega Finvest, which is a wholly owned subsidiary of Relega Enterprises and Relega Housing Development Finance. Currently, RFL holds about 87.5% stake of the total share capital of Relega Housing Development Finance Corporation.
Okay, moving on and shifting gears to the auto space. And Ashisha, you have picked a two-wheeler major, Hero MotoCorp. Tell us, why is that so?
Particular counter is in focus, and that is because the company has announced VRS, or voluntary retirement scheme. Company says that the vision is to make the organization agile and future ready. Company is now consolidating roles and reducing layers as far as the organizational structure is concerned. The company has also said that this move will help reduce the cost burden and support margins in the near future. This move will also help the company improve efficiency through a lean and more productive organization. So in the back of this update that has come in from the company, the stock is in focus today, not reacting much, but this is an important development considering margins are expected to improve in the medium term.
Okay, moving on to stock number 33. And Ashish, what we are seeing is all these gas counters are buzzing. After that sharp fall towards the start of this particular week, we are seeing them gaining momentum and rebounding in trade. And the news flow says that the Kirik-Parekh committee recommendations are to be taken by the cabinet. And they're definitely reacting to that. But specifically on the charts, what are you looking at?
See, if you're looking at Indraprastha Gas Limited, we can clearly see a very strong breakout on the upside. The stock was struggling around the levels of 450, reversed from there a couple of times, but today what a volume and a huge move that we are seeing on the stock. So I think it is a very smart rally that we are seeing in Indraprastha Gas Limited, and the stock can be headed towards the level of 500. Use any kind of dips from here as a buying opportunity, and on the downside, place a 440 as a stop loss. So the risk reward will be good if you buy on dips from here, for a target of 500 and possibly much higher, placing 440 as a stop loss.
to the next sector in focus, and that is the realty space. And if you will see, realty index is the top sectoral gainer in today's trading session after we have seen RBI taking a pause onto the repo rate hike, and this time around where they have kept the repo rate unchanged at 6.5%, wherein 5 out of the 6 members decided to maintain the withdrawal of stance. Along with that, the decision to pause is for this meet only is what the commentary is coming for. But if we will see, all these realty stocks are seen to be buzzing, as this is seen as a relief to the affordable and the mid-housing segment home buyers who actually feared a possible rate hike today, making property buying via home loans even harder. But nevertheless, a pause coming in is definitely a surprise and a welcome move for the realty space. Godrej Properties, DLF as well as Oberoi Realty onto the screen, showing gains of anywhere between 3.5% to 5.5%.
Yep, all up and away in today's trading session. And Ashish, let's pick out DLF from that basket because that's the stock that you're tracking on the charts. Run us through the levels that you're watching out for.
Yes, absolutely. See, today after the RBI announcement, we can clearly see a very sharp cut even in the bond yields, and the bond prices have been rallying. That's a good sign that there is going to be a relief for the home buyers for sure. And DLF has shown a very smart rise on the upside after forming a triple bottom kind of a low and then recovering sharply from those lower levels of 350. So over here we can expect the stock to achieve the target on the upside, which is at 410. That's a aggressive target, but it looks possible from here on. And the support for the stock is at around 360 levels. So as long as 360 is intact, we can expect the stock to be at around 410 levels soon.
Okay, for the next stock, let's shift focus to Nykaa. One day up, one day down. That's the movement we are seeing for Nykaa and Vamakshi. For today, the stock is under pressure. Tell us, what is the news flow?
Well, Srishti, you're absolutely right. This stock is definitely reeling under pressure after the company came out with a Q4 update. Now, this is the first time that Nykaa has provided a post-quarter revenue update. In fact, what they're highlighting is that they're expecting to maintain their 9-month growth rates for FY23. They're expecting a 42% growth to come in on the GMV front, and 37% revenue growth is what they're expecting to maintain. The BPC vertical, that is the beauty and personal care vertical, witnessed strong demand in the fourth quarter. Growth rates were higher than the 26% GMV growth that they saw, and that was aided partly by the Pink Love sale that Nykaa has. The fashion vertical, however, that was impacted, it was affected in part by the consumer pullback in discretionary spending. Fashion revenue growth in Q4 is expected to be in the late teens. So on the back of a weak set of numbers that have come in from Nykaa, the stock is definitely reeling under pressure, down over 3% as we speak.
All right, watch out for that stock in trade. Moving right on then, let's discuss Mazgaon Shipyard, Mazgaon Dock, as the company as well has come out with their operational updates, as the company has recorded a turnover of about 7,547 crores approximately on a provisional basis for the financial year. This is as compared to 5,733 crores that they recorded last year. So there has been an uptick on a year-on-year basis in their Q4 provisional turnover. The stock price, though, continues to remain muted in trade around 688 rupees.
Okay, moving on to stock number 38. Ashesha, coming to you for the next one. You have picked up Kalyan Jewellers. Tell us, why is that so?
Their operational data. In fact, operational numbers look pretty good, and the commentary from the management is also very strong. As far as Q4 revenue growth is concerned, it stood at about 17% on a year-on-year basis. And India operations has also shown strong growth at 16% versus 12% that the company had reported in the previous quarter. As far as margins are concerned, the company says that margins have largely remained stable as compared to same time last year. Consolidated revenue, meanwhile, grew at about 12% on a CAGR basis over the last 3-year period. As I mentioned, the management commentary is also quite positive. They say they are witnessing encouraging trends in the advanced collections that they have seen. However, they are upbeat about the upcoming festive and wedding season, and they've already commenced campaigns around fresh collections and sub-brands. On the back of strong numbers and strong operational updates that the company has reported, the stock is in focus today. Remember, the management commentary is also quite optimistic.
Okay, that's the view coming in on Kalyan Jewellers. Moving right on then, Ashish, let's discuss Coromandel International. What's the outlook basis the chart reading?
See, Coromandel International showed a very good support at around 860 levels. and in past today and yesterday it showed a very strong bounce back on the upside. So looks like the trend is changing back on the upside from here, and we can expect it to retrace towards 61.8% retracement level of the fall, which gives the target of around 1020 on the upside. So the overall target for Coromandel is at 1020. On the downside, the support for the stock is at 880 levels.
Moving on, the results season has kick-started and no surprises there when GM Breweries is the first counter, the company coming up with its Q4 FY23 numbers. Ashesha, tell us, how are you looking at the numbers and what the company reported?
Yes, the numbers are looking pretty weak, and that is what the stock is reacting to. It is in fact declined in trade today, nearly 3.5% after it reported its numbers. Revenues have grown a tad bit. They stood at 155 crores in the quarter gone by versus 142 crores that the company reported same time last year, indicating an expansion of nearly 10% on a year-on-year basis. However, when we look at the bottom line, it has de-grown on a year-on-year basis. Company has reported profit at 35 crores in the quarter gone by versus 40 crore profits that the company reported same time last year, indicating a decline of nearly 12.5% on a year-on-year basis. So weak set of numbers is what GM Breweries has reported, and that is what the stock is reacting to. As I mentioned, it is declining in trade, 3.5% lower for GM Breweries.
Okay, moving on then, Vamakshi, let's discuss the real estate stock that's on your radar, and that's Macrotech Developers.
Has strongly picked up in trade today, and that is on the back of an update that the company came out with, obviously, for the fourth quarter. When we're looking at the overall update, it looks like quite a strong update that has come in. The pre-sales, as expected, has surpassed the yearly guidance that the company has given. Quarter 4 sales, however, we're seeing that quarter 4 sales are seeing a bit of a dip. The debt reduction for the company particularly continues. Now, the company also says that they have achieved the best ever annual pre-sales performance. They've definitely surpassed their guidance of 11,500 crores, and this is in fact the fourth quarter is in fact the third consecutive quarter of over 3,000 crores in terms of pre-sales. As far as the collections are concerned, in the fourth quarter, collections were up nearly 3% on a year-on-year basis. And as a whole, financial year F23, the collections were up nearly 23%. When we're looking at the net debt, in Q4, the net debt did reduce by around 971 crores, and the business development, when we look at FY23, they've added nearly 12 new projects with a GDV of 19,800 crores, and over here again they're surpassing their guidance. Strong operational update, and that is the reason why Macrotech is up and away in trade today.
Okay, here's highlighting the last stock for Market Fatapat today, and stock number 42 for you. Switching gears to the auto space once again. Force Motors, if you will see, quite late reporting its March sales data, and this time around the domestic sales has been reported at 2,428 units for the month of March gone by. That's a marginal uptick from on a sequential basis from 2,236 units being sold in the domestic market for the month of February. But when it comes to the export sales data, there has been a decline on a month-on-month basis, with this time around for the month of March, the company reported a number of 106. Okay set of numbers, I would say, and the stock is reacting to it by holding a gains of around 2.5% right now.
Okay, there you have it, 42 stocks down, and we're completely timed out on this leg of the show. So we'd like to take time out to thank Ashish, Vamakshi as well as Ashesha for joining in and sharing with us all of those stock ideas and buzzers in trade. And with that, we'll wrap it up from Shishtini and everyone that put the show together. Thanks so much for tuning in.